Hey everybody, I'm Marcos.
And I'm Kirsten.
And this is the Minnesota Real Estate Investing Podcast.
Join us every week as we discuss real estate investing in the land of 10,000 lakes.
Welcome everyone one more time to our podcast. Today we're recording our episode after a couple weeks of being gone. We had to take a vacation. And we thought we may be able to record something in Florida, but no. That
we
didn't
needed
happen.
to just take a vacation.
Yeah. We wanted to focus on our family, on relaxing a little bit. We still did some business from there, like, it usually happens. We actually went and looked at a couple houses there and went to open houses and made some connections in Florida, but it's all part of being in this type of business, right? So
And now we're like, should we buy something in Florida? So
yeah.
maybe we'll do that. Stay tuned.
Mm-hmm. Yeah, so, and, it would be interesting, too, because we would do it from here, from Minnesota, so, I don't know. We have lots of great goals and lots of amazing ideas, and we're trying to see if we can put all that together and make sure that we are
Out of here for the winter. We're filming this during the epic, historic snowstorm.
Yeah, we'll see. This is this is gonna
fine
air on...
outside right now, so I don't know.
Yeah. With that being said, I'm sure you're curious to see, to hear about what we're gonna talk today, what our subject is.
By the title, you already know.
Right. So we're gonna get into that. We wanted to talk about investment strategies, or how to look at investments in this market. It's challenging depending on what you're doing. There's several different things that are going on in our market, and it's very difficult to really have really strict goals, or the expectations, need to be more long term rather than short term like they have been in the last couple of years. For one reason or another, and
what are ways that you can be creative and still make money in this when prices are so high and interest rates are so high? What can you do?
Mm-hmm. Yeah. How can you still invest in real estate and end the year with cash flow, with financial freedom, or closer to that goal, at least? And there are lots of different ways that you can do it, but let's get into it. So the first thing that we're going to talk about is how we did things before and how we were looking at investments and how previously, and then what we changed and how we're looking at them right now. I'm just gonna start. The way we were looking at things before was more from a cash flow perspective, especially for long term, for rentals. Our focus was long-term rentals, Class A, cash flowing at least $500 a month, and that has been very challenging too. The other part that we were wanting to do is making sure that we had 20 to 25% equity in our investments. Another challenging part because between purchase price and rehab cost, ideally, the bare method, you should be doing that. You should be between purchase price and rehab, you should be at 75% of the ARV. But how can you do that in a market where maybe you are at already 65% of ARV when you purchase a property, and then you have to still put all the money into it. So that has been very challenging, and it made it so lots of opportunities kind of slip away. One of them being the one that we already talked about.
Which now I saw online for rent.
It's, yeah.
They didn't do anything to it. No, all they did was I had to show you, they slightly renovated the half bath.
What half bath?
They can't rent it though. I've thought about reaching out to them, see if they want it, if we can buy it from them. That's another story for another day.
Yeah. If that comes to fruition, then we're going to have to do the whole epic story about that investment. Hopefully we can do a podcast about that and teach you guys how long term you end up doing lots of things here. But so that was the way we were looking at things. We had to change. How did we change? Well,
since the interest rates are high, we expect them to come down. And so and also we're kind of more looking at doing some midterm and short-term rentals because, we love that cash flow. Who doesn't? So that's how we're going to try to, we want it to, first we need it to break even as a long-term rental. Okay. So it needs to break even. With the interest rate where it's at right now.
Exactly.
Then, after we set it up as a midterm or short-term rental, we're going to be able to cash flow hopefully a few $100s a month, at least, and then we can refinance when rates do go down, and we can decide, do we want this to be a long-term or short-term rental still? Maybe we're making good cash flow with the short-term rental and we like it, so we'll keep it there, and then we'll just even have more cash flow. But basically the plan is refinance. Make sure it breaks even, but we are planning on refinancing so that we can have better returns.
Exactly. And another way too that we had to look at it, I think it's, price-wise, it's very important, even more important than before, since interest rates are so high. So interest rates are high for the type of loans that we're getting. Prices are high just because of the market. And, spring market is among us. We talked about it in the last couple podcasts. And it's getting kind of crazy again. So there's more sense of urgency. There's less time to think. And more things to analyze, and a lot more things up in the air. With this type of environment, if it breaks even long term, it's good to go for us.
Another strategy that we've been implementing and getting, we've been getting somewhere with it, but we've had a lot of frustrations with it too, is we look at things that have been on the market for a long time. The issue we've had with this is that we can't give them full price offer, right? Because they've been on the market forever. That's clearly overpriced. And most of the time, the funny part is that since the market has been picking up, some of these sellers have been able to get that higher price that they were asking for back in August or something,
Yeah.
So that's kind of an issue we've had with that. And then we've made offers and been negotiating, and then, at the end of the day, we've seen a lot of things selling for what we've initially offered, and
which is very frustrating.
Yeah. So that's a good strategy. We're still trying to figure out how to get our offers accepted. Better. We need to negotiate, in a way that we can get it under contract, and then you have to take a risk. That's one thing, is you still have to be willing to take that risk, get it under contract, and then negotiate after inspection, because then you're less likely to have the seller, not want to accept your offer. So
Yeah, so there's a little secret for all of you out there. It's easier to negotiate with a seller once they're under contract. Because if you're using whatever contingency you have on that contract, that purchase agreement, the risk for them is going back on the market and then being like, other buyers are going to be like, well, why did you go back on the market? Oh, you failed inspection? What's wrong with your house? That's the first thing they're going to think about. So once you put them under contract, you have more leverage than trying to negotiate up front. And I think that's the goal. Sometimes you are going to have to make that offer that's $25,000 or maybe even more than above of what you think you should get it at. And that is something that we know we have to do now.
Well, and we did that with the Plymouth house, but it left a sour taste in our mouth because we did so much work for it and spent over $1,000 on inspection and all these other things, having contractors come out and stuff. So it's like we want to negotiate before we get it under contract, but then we're like, we just can't do that because we're going to lose these properties. Someone else is going to come up and maybe they'll offer full price with the market as it is, especially in the neighborhoods we're looking in, because we like Class A neighborhoods, and that's where we think it's important to, at least for our investing, to invest in areas that we know will appreciate if we're going to be, if we're going to accept a break even for a long-term rental,
Correct. Yeah. So Class A gets better tenants. Usually those are tenants by choice, usually. Or it's a different kind of tenant than in Class B or Class C properties. So that's where we want to focus, just because we are not in real estate to get rich tomorrow. That would be amazing, right? But this is long term. So if you want to do this long term, you need to make sure that your assets are giving you the less headache possible.
But I don't think that's like a strategy that you have to use. Like, I feel like that's just really personal, like which each investor is going to have their own preference, and so
as far as investor, you have to do what you're comfortable with in the areas that you're comfortable with. So another thing that we started analyzing and kind of touching base with some people, for example, at BSM we have the advantage that we can know about rentals that are becoming available. It's arbitrage. If you don't know what arbitrage is, it's basically renting a property and then subletting it to someone else. That's the basics of arbitrage, and of course, if you do that for a profit, that's the way to go, right? Usually, arbitrage is used as a way to leverage a rental to make it into a short-term rental, whether you're putting it on Airbnb or VRBO, whatever the website is, or a mid-term rental. The goal is, of course, cash flow. Why are we talking about arbitrage?
Well, it's a strategy that, it's like fine line. Is it real estate investing? You're investing some money, but the asset isn't yours, so it's a little different, but it is a strategy right now that we're going to try. Hopefully we're going to start looking, and we're going to try this so that, we can at least start getting some cash flow. And we feel like, I want to try setting up some of these homes, and I'm excited to test my design skills, and we don't have a short-term rental, but we want one, and so it's a good way to kind of like, it's a lower risk, since there is a lot of risk in this market because we don't know what's going to happen. Like a lot of people are saying, no, there's going to be no crash, and I don't think there's going to be a crash, but I don't know, and I don't know what the Fed's going to do with interest rates, even though, I know they're not directly related, but still they are trying to, put us in a recession. So what's going to happen? We don't know. This is a very more of a safe way to get some cash flow.
Yeah, yeah, because
And
the highest risk you have is that you have to pay rent for a total period of 12 months, and that's
yeah.
it. You
Or
then
maybe you even just like you could talk, like the thing is you can negotiate with the landlord. Maybe you're like, can we do a 6-month lease or something?
Mhm.
You know, like I don't know. We're this to us. We're like, oh, why didn't we ever think of this? You know, but it feels safer to me in this market. And
Mhm.
if any of you are interested out there, like we would love to talk to you, and I can help you set it up. You know, Jenny and I have our InveSTR business that we're starting, and so you got us to help you there.
Exactly. Yeah, I'm gonna put all the information here and in the description of the video podcast, whatever you're if you're watching on YouTube or listening on Spotify or Apple Podcasts, it's gonna be in the description. So you can reach out to Jenny and Kirsten. So if you're interested in setting up your short-term rental, mid-term rental, whatever that looks. I think that arbitrage too is a great option for people that really don't have
A lot of money.
a lot of money or
Mhm.
can't get approved to buy a house, or maybe you just want to like tip your toes. Is
Or
that
wait,
right?
yeah, put dip your toes in, or wait till interest rates come down. You know.
Exactly. So in that way, you're building cash flow. Maybe what you need to do, if you don't have a lot of money, you need to save more. Well, why don't you invest some money to make more money? So I think that's a good way to still be in real estate, in a different way.
Yeah. Haven't tried it yet. I mean, I've been looking at places, so I don't know if it's gonna work, but it's crazy to me that you can rent something for so much less than the mortgage would be sometimes. Not all the time, but in so many homes right now, like the mortgage is going to be more than the rent is.
Yeah.
So
Which is insane. I think that's given for a couple things. Like probably the person that's renting that out bought it a long time ago. A long time ago could be 2019 or 2020. You know, with lower interest rates, or for sure lower price. And the numbers work for them, right? Now, if you buy that property right now and you're renting for the same amount of money that they're renting, then you're negative.
Right.
And you're not in this business to lose money. So you can still look at that property as a mid or short-term rental, take it from the landlord, be straightforward with the plan that you have. They're probably going to try to, either
you can sometimes offer them a profit of your, if it does well. So there's a lot of podcasts and things you can go out there and find more information about that. So.
Yeah, but that's something that we wanted to present to you guys to open up an idea in your heads to analyze other potential ways to make money. Another strategy, which is honestly, it's our favorite to start in real estate. I think that if you
even if you've already started but you still want to invest in something, it's another good strategy, which is
house hacking.
Yeah, it's a great strategy in this market, because you can be more flexible.
Exactly. You can be more flexible. You can take on a higher price than expected. You can take on a property that maybe it has equity to be built. It has some sort of I don't know, how would you say it? Like there's some benefit in taking on that property and moving into it.
Yeah, living in it for at least 2 years. Because
I would always advise that.
You don't have to pay capital gains. Then maybe you finish the basement or the home, like I don't know, maybe interest rates go down a lot, then you can refinance and then you rent it out. Or like what we're thinking of doing is building out a basement that can be rented as a short-term rental, and then we live in the upstairs.
Exactly. There are several different ways to do it. I mean, usually when most people hear house hacking, they think about a duplex, right? Or maybe a fourplex. It just depends on the situation you're in. We did house hacking in a duplex. We have a podcast about that I'm going to put in the description and how we did it. It was a different market, though, because we bought it at the end of 2018. So numbers look way different back then than what they look right now. And that's something that I want to talk about when you're house hacking. I think that even more, you have to look at the future with house hacking, especially in this market. Because there's a reality, even if there's a crash, prices right now are going to be lower in this market that we're in right now than 10, 15 years from now. And anyone who doesn't invest is going to regret it, no matter what. So if you make it a good investment, if you make cash flow or at least break even, you know you're going to have your future set up for you.
Well, and I wouldn't even say you need to, like, that would be a great thing if you could break even, and you'd probably more likely be able to do that in a duplex or a fourplex or something. Mm-hmm. But, like, I feel like even if you're just getting, supplemental income where your mortgage is lower, that's really great for the economical environment that we're in right now because, like I said, are we going to have a recession? Like, there's inflation and all these things going on, so it can really shield you from some of that. And I mean, that's why this is becoming so popular because people just need that extra income. And then you look at it in the future as well. Eventually, I will be able to rent this out and cash flow, or at least break even in a few years. So that's the way I look at it, and I'm excited. That's our plan. Like, that's my new idea. I'm always coming up with ideas, and we're thinking of doing house hacking again, but in a single family home. In the basement that's unfinished, we'll like finish it out as a mother-in-law suite. So stay tuned for that.
Yeah, hopefully you can share that experience soon.
Yeah.
And I think it's a great way, like you were saying, to take a look at it in a way that's going to help you right now. Maybe you're not going to completely erase that mortgage, but it's going to be a huge help to pay lots of bills. Maybe, it pays just half of the mortgage. I mean, some people don't even have that. So, and if it works long term too, you can run, whether it is a short, mid-term rental, long-term rental, you can run it from any type of house. If you're...
Well, you do have to look at the city that you're buying in and just make sure that, like, for the future especially, like, if you want to rent out those 2 units, like, can you add an ADU? Otherwise, you might just need to rent the whole home out if it's in, like, a city that restricts short-term rentals, or if you can only rent out to family or something. Yeah,
depending on the city, there are different restrictions. For example, Minnetonka, the city of Minnetonka, because we have been in touch with the city a lot in the last few years, and I know that if it's zoned as single family, the chances of them rezoning it to a multifamily, if that's what you want to do, are close to none. So if you are buying a single family with the expectation, well, I'm going to divide it and, I'm house hacking right now, and then I'm just going to put a tenant upstairs and I'm going to keep... That's probably not going to be possible. You're going to have to rent out the whole house. That's one of the cities that requires for you to rent out the whole house. Which
if, you live there long enough, you'll be able to do that. So.
Oh, definitely.
Yeah. So it's still doable.
It just depends about how long you plan to live there, how long the asset needs for you to live in there, and it's the same thing with a duplex. Even, like, let's say that's why it's a good strategy for this market too. As well, you're moving into the duplex and maybe you're not quite even breaking even, but you're looking at the numbers right now, and they're just, even if you had to rent that thing out, that you would maybe break even or something. Well, in the future, you're going to get some cash flow if you live there long enough. So if you live there long enough, if interest rates go down, if there's some equity to be built. That definitely. That's what we always recommend. Like, get a duplex where you can finish the basements and, like, add a bedroom and bathroom, and, like, you'll be able to cash flow in a year.
or less, like right away. So like, you know, those are the best. That's what we did. That's the best way to do it.
That's, yeah. If you're looking to get started, go ahead, do that. Make sure you break even long term right now, because you're going to cash flow. Because rents, even though they may go down this season, that's the rumor that where we're heading, they may go down a little bit. Rents throughout the years are going to go up. Prices of houses, even though we could go down, they're going to go up. And when they go up even higher than what they were before. There's always a recovery. We have inflation right now, which is a huge factor. That's only that is going to make rent and home prices go up. Only inflation. Because the dollar is not going to be valued, it's not going to have the same value today that it's going to have 3 years from now either. That's what happens with inflation. And if you make sure that you have an investment that is today is breaking even, meaning that is not making you money, but it's not costing you money, you get tax breaks. Mm-hmm. You get an asset, an appreciating asset. And
and it shields you from inflation.
Correct.
You know, when you put your money in assets like real estate.
So the interest rate that you're putting into long term right now, most likely is going to be lower than what inflation is. So you're getting an interest rate at a certain rate with the money that you're putting into it. And then that money, it's not that it's going to be worth the same, but you're going to have so much appreciation with the same rate. It's going to make it so you actually invest better in real estate than in the stock market, if that makes sense. I try to explain it a little bit. It's weird how this works, and you need to have some basic knowledge on economics, unfortunately, to really. But once you get it, it's super simple, because inflation is what right now, like 8 points.
No, it went down.
Oh yeah,
it went down. Right. I think to 6 or something.
But for conventional loans, most people can get between 5 and 6 right now, like 5.5 and 6. That's lower than inflation. You lock it in for 30 years. You are house hacking, so hopefully you can put as low as 3.5% down. Your return on investment in that thing, even if you put work into it, your cash and cash return is going to be through the roof throughout the years. Because then rents are going to go up, the value of the property is going to go up because you put work into it, and then your interest rate, you may be able to put it even lower, and even if you don't, the value that you bought it at and the money has more value today than what's going to have tomorrow. So
it's worth more.
It's worth more.
Yeah.
Yeah, it's complicated to say. There's not an easy way to say it, but
we have to wrap it up. We gotta go pick up the kids because they're closing the school at noon today.
Yeah.
So.
All right. So.
Those are our strategies. We probably have some more, but that's what we could think of today. So.
Right. Yeah. It is something that you have to do in this market. You have to adapt and make sure that you are still investing, and it's long term. Real estate is not you're not going to be rich in a year. You're not going to be rich tomorrow with this. It's long term. If you have to get a job and make sure that you work your butt off in that job, and from there build your real estate empire, do that. Make sure you have stability, that you can invest, and then go ahead and do it. Hire experts for everything you do. That's what I wanted to close with. I hope you like our podcast of today or show. I was going to say it's good to be back, and then I look outside and all the snow, and I don't know if it's that good to be back. But
at least good to be back, giving you guys some good tips. So
see you hopefully next week.
Yeah.
Bye. Thank you for listening to today's episode. We hope you enjoyed it and took some valuable information out of it. If you want to reach out to us with comments or questions, you can find us on Instagram, Facebook, and our website, milagrohomesre.com.